Hi, everyone. Some people are still coming in from the waiting room, but let's see. Okay, good. Um, Good evening. I'm Debbie Schwartz, founder of Road to College and the Paying for College 101 group. And I am here tonight with Chris Abkarians, who is one of the co-founders of a company called Juno, and he'll explain to you what Juno does. But tonight we're going to talk about the Student Aid Index. Maybe pretty good in depth. So I think after tonight, you'll have a really good understanding of what how the Student Aid Index is calculated and how it fits into the schools deciding on aid that they provide, and the FAFSA form, which isn't going to be live this year till December 1st. But before we go into the slides, I just want to do a tiny bit of housekeeping. This is just, if you guys are willing, sometimes we ask if you will put on your video. It's just nice to see people's faces as opposed to the black box. So that's just one little request. Thank you for some people who've done that. The second is that these are technically meetings, Zoom meetings, as opposed to webinars. I only say that because you come in muted. If you really want to ask a question, which is fine, and we do sessions like this, if you can raise your hand, you can unmute yourself, you can ask the question. Otherwise, I'm going to be looking at the chat and either trying to answer your questions, or might interrupt Chris to ask the question, or we will look at the end of the session at a lot of the questions that are being asked. And the last thing is, this is recorded, and a link will go out tomorrow in an email for the link to the recording. So with all of that, let me introduce Chris. We've done a lot of webinars and partnering with Chris over the past few years, and with Juno. And Chris, if you want to give a little background on yourself and what Juno is, and then into the topic of Student Aid Index.
Thank you very much, Debbie. I really appreciate the opportunity to be here, and thank you everybody for taking some time out of your evening to join us. So I'm Chris Abkarians. I co-founded a company called Juno about 6 years ago, and I'm here to talk to you about the Student Aid Index, a little bit about FAFSA, and about a new product that we launched today that I'll get into in a little bit. The core of Juno is helping families better understand how to navigate the financial aid process. And traditionally, most of what we've helped people with is finding cheaper student loans for college. And so that's a topic that we'll talk a lot more about over the next couple of months. For today, we'll focus quite a bit more on understanding what you need to do before FAFSA is going to launch in December, and a little bit more about how the numbers that come out of FAFSA impact the overall financial aid package that you'll receive. So here's just a quick agenda on what we'll walk through. I'll give you just about a minute on the general student aid timeline, assuming that your children are going to college next year. We'll talk in depth about what the Student Aid Index is, and even more in depth about exactly how it's calculated through a pretty detailed example. And then we'll talk about a few strategies that you could use to make sure that your Student Aid Index is accurate and as low as it can be, which is the goal. A little bit more about how that ultimately plays into an example financial aid package. And then I'd love to introduce you to a new platform that we just launched called collegeaid.org. We have an AI-driven bot that we've put together that can help you answer pretty much any question about FAFSA or federal grants. And I'm very excited to share that with you. So as Debbie was mentioning, if you have any questions as we go through this, please do just write them in the chat. We'll make sure to go through them. If you have, if you need to drop off for any reason, this is being recorded and you'll get a copy of it as well. So don't worry if timing doesn't necessarily work out. And with that, I'll jump in. So we're going to start with a really quick timeline on financial aid. So this is assuming that you or your children are applying for a regular decision. Uh, FAFSA for the next school year opens up around December 1st. The target date is December 1st right now. As of right now, we have no reason to believe it won't be then. Within 1 to 3 days of submitting your FAFSA, you're going to get back a number that's called the Student Aid Index. And that's going to be the focus of today's presentation. You'll submit college applications typically by the beginning of January, and then you'll typically get your financial aid package, which includes your federal aid, state aid, and any institutional aid from the school in March to April. This is for regular decision again. At that point, you might want to consider appealing that financial aid award. You'll need to decide where you're going to go to school by the beginning of May, typically. And then you would typically look at researching student loan options if that's something that you'll need to help fill any unmet need in your financial aid, and apply for those towards the beginning of next summer so that you can pay tuition by the end of August or the beginning of September. So that's a lot. For right now, we're going to zoom in on one small piece of that, which is understanding what the student aid index number is and what it actually means for your financial aid. So I'm going to start off with just the most important thing to start off with is your student aid index is meant to inform how much financial need you might have for a particular school. And it starts off by taking the cost of attendance for a school, which is going to be different from one place to the next. And then you subtract the student aid index number from that, and that equals your financial need. So the lower your student aid index number is, generally that means the more financial need you might have. But just note that the amount of financial need that you have is going to change if one school is more expensive than the next. So now let's go into what student aid index actually is, and then a lot of examples on how we calculate it and what you can do about it.
And Chris, can I just comment that just
Sure.
the financial need is not what the college is going to cost you.
Correct. Exactly.
It's just what the college uses to determine if and how much aid the government and they might offer you.
Exactly. So maybe to start off with, student aid index is really just an index. It's a number that ranges from negative 1,500 to much higher than that based on the inputs in your FAFSA application. By itself, it doesn't really mean very much. Generally, the lower it is, the more aid you might be eligible for, but it is not your financial aid offer. It doesn't tell you exactly how much aid you might receive. It's really just something that the school is going to use when they're determining how much aid to allocate to you when they give you a financial aid offer a few months after you fill out FAFSA and around the time that you're admitted to school. So really the thing to remember about this is we're going to, at the end, walk through an example of how student aid index plays into the amount of federal student aid you might be eligible for. But typically after getting federal student aid, a lot of people still have unmet financial need. That's not going to pay for everything that you need. And schools will often use the student aid index to help them understand who among the people that they've admitted needs a little bit more financial help. And so if the school has a need-based aid budget, they might provide more of it to people that have a lower student aid index than a higher one. I see some good questions here. Christine, we're going to get to practice FAFSA and more details on FAFSA in a presentation in the beginning of December. So we'll actually walk through everything in detail there and what to know. And a few of these other questions, we're going to touch on these a little bit later in the presentation. So I'll just wait until we get there, if you don't mind. So where can you find your student aid index, which is abbreviated to SAI? You'll see it twice. So there'll be an estimated index when you submit your FAFSA on the confirmation page. And then you typically have to wait 1 to 3 days after you submit your FAFSA, if it's an online application, to get your official student aid index. And you'll be able to find that on something called your FAFSA submission summary, which will be in the same dashboard where you submit FAFSA itself. And so what you're going to end up seeing is some instructions here that you can use when we send the deck at some point tomorrow. If you want to see where to find your student aid index, just know that you'll generally be able to see it pretty quickly. And again, it is not your financial aid package. Your student aid index is really just something the school is going to use between the time you submit your FAFSA and the time you get admitted to determine how much your financial aid package should be. And you'll get that actual aid package much later. So now we're going to walk through a pretty detailed set of slides around how SAI is calculated. And before we go into the components, I want to make two things really clear. One, a lot of the income components in SAI are pulled directly from your taxes. So when you fill out FAFSA, you provide consent for something called IRS data retrieval. And so you don't have to, in most cases, manually fill the fields out. They'll be pulled from your 2023 taxes. FAFSA for each year uses something called prior year income. And so for the 2025-2026 school year's FAFSA, it's going to be pulling your 2023 taxes to use for income. The asset values that you report into FAFSA are based on the value of those assets on the day that you submit FAFSA. We're going to go into that in a little bit more detail and some of the implications of that, but just know that that's how it works. And not all of your income and not all of your assets count towards student aid index. There's a lot of adjustments that bring the number down quite a bit, and that's what we're about to walk through. So the three components of student aid index for, I'm going to walk through a specific scenario that I'll tell you about in a second. Just remember that there's something called a parent contribution. That's the most complicated to calculate. And then we add something called the contribution from student income, and then the contribution from student assets. And those three numbers together equal your student aid index. The first one that we're going to go through is the parent contribution. And we're going to do this whole thing for one specific example. So let's assume that this is a family of 4 where there's a dependent student who's going to college. Parents are married and they're filing taxes jointly. Let's assume that the parents' combined income is $80,000 and that they have $50,000 of assets, not including the value of their primary residence or their retirement accounts. And let's assume that the student has $15,000 of income and $2,000 of savings. You don't need to remember any of this. We're going to show it to you again as we go through the slides where it matters. Just know that this is an example of how it works. If your family structure is different than this, the math will be slightly different, but the rules are going to be generally the same. So we're going to start off with calculating the parent contribution piece of student aid index. And the first step of that is to understand what this line called parent available income is. And so parent available income is made up of your AGI from your taxes, approximated to your income, minus a bunch of different allowances that get to something called parent available income. So let's say the household income is $80,000. There's a part of the SAI formula that subtracts out the federal taxes that you would normally pay, and then further reduces that $80,000 by something called an income protection allowance. That income protection allowance basically just says, as a family, you can't afford to put all of your income towards paying for college. And so based on the number of people in your family, there's a table that gets updated every year that shows the amount of income that can't get counted towards your student aid index. And so in this example, for a family of four, you have $80,000 of income, $64,000 of that is protected, only $15,960 goes into the parent available income line. Now, there's going to be more adjustments on this later, so don't worry yet about that 15,960. Just know that this is how we get to that first number. Yes, Jay, I'm using parent income equals AGI in this example. The allowances are calculated in, I can send you an example of it in a little bit more detail afterwards, but you can think of it as the key buckets are federal income tax paid. This is, again, pulled from your taxes, plus, and then they also subtract out the taxes that you pay for FICA, so Social Security and Medicare. And then they subtract out, for this family of four, for example, roughly $43,000. That's protected because you have a family of four. If you have more people in the family, more of the income gets protected, and so the allowance is larger. All right, I might try to move on to parent contribution from assets. And if we have more questions on this, I'm happy to come back to it.
Oh, sorry.
So, yeah.
Somebody is just saying, how are the allowance calculated? I know you kind of generally explained it, but I don't know if you want to just click to the, I don't know if you have that in your appendix, the table. But you were basically, explaining that it's based on family size.
Yeah, let's do that really quick.
And that this table is determined by the government.
Yeah, so you subtract out all of the federal income tax and the Social Security and Medicare tax, and then you also subtract out the numbers in this table that match with whatever the size of your family is. If you live in Alaska or Hawaii, the income protection allowance is a little bit higher. I'm just showing you what it looks like for every state besides that. But this is basically the whole math that goes into it.
And this income protection allowance changes year to year. Again, it's determined by the government.
Sandy, family size is, it's not the only income protection. It is, so technically using that term, income protection allowance, yes, it's only based on this table in front of you. There are more adjustments that happen to your income and to your assets in the next couple of slides that will keep cutting down that number that we just calculated by a lot. Let's get back to where we were. So we're going to move on from parent available income to parent contribution from assets. So there's going to be two steps where your assets get adjusted. In general, the way to think of it is what you have to report.
Go ahead.
So on FAFSA, you're supposed to report the net worth of your assets. Your assets do not include the value of your primary residence or your retirement accounts. They only include everything else. And so you will have to include the value of cash, of investments and equities and bonds, and then the net worth of investment properties or businesses. And the net worth is just going to be the equity value of, let's say, the property minus any debt that you owe on it. Those numbers get added up to net worth of assets. And then you multiply that by 12%. And then you get to something called parent contribution from assets. Those asset values are based on how you value them on the day that FAFSA is submitted. So there's going to be one more adjustment that happens to this number and to the parent available income number that we'll talk about in a minute. when you add those two numbers together, you get the green line that we're looking at right now, called parent adjusted available income. And then there's one last adjustment. Sorry, this is, if any part of this is confusing, but the last
Oh,
adjustment is
no,
called
egyáltalán.
a
Én
contribution
köldökövekben bőrök,
adjustment.
hát nekik nem nincs property tax.
Can't
No
move
worries.
my cursor quick enough.
So the last adjustment is called the parent contribution adjustment. It's a reflection of saying, okay, you have your parent available income that we
Nem
calculated,
sajnálom tőlük,
plus the
de
parent
azért-
contribution from assets. That gets us to 21,900. Then there's a table that I want you to think of like tax brackets that the Department of Education updates each year. And you should think of it as there's marginal rates, and based on what those rates look like, that's how much is going to count towards your student aid index. So to make this a little bit simpler, the way to think of it is your parent adjusted available income, and the example that we walked through is 21,960. Based on this table, you would take 22% times the first $21,300 of that, plus $660 times the next tax bracket that you're now bumped into at 25%. And that's going to equal $4,851 as the total parent contribution. Let me check to see if we have any questions on this. All right, great. In the case of divorce, the parent who provides more financial support to the student over the past year is the one who's supposed to fill out FAFSA. The other parent does not need to. If both parents have provided an equal amount of financial support to the student over the past year, then the parent who has the higher income and asset is generally the one who's asked to provide their information on FAFSA. Dave is bringing up a good point here. There's a few interesting things that we're going to get to in other slides. Home equity in your own home is not considered an asset. So maybe to combine that with David's question, if you used available cash to pay off, to reduce the outstanding debt on your primary residence, that would result in a reduction in student aid index. You just want to make sure that you're able to do that before you submit FAFSA. And so in a few slides, we'll get through interesting things with respect to timing, ways that you can optimize your student aid index. But just know that it's not going to make as large of a difference in many cases as you might think it would. And we'll walk through some examples in a few minutes on why. So to kind of bring that parent contribution piece to a close, and I'm happy to return to this at the end for as long as anybody would like. We started with a family of four that had parent total income, household income of $80,000 and $50,000 of assets, not including their home or retirement account. And that shrunk all the way down to a parent contribution of $4,851. The next two steps are going to be much simpler and much quicker. So first, we're going to go through the math behind how you get to the student contribution from income and then the student contribution from assets. And then when we add 4851 plus those two numbers that we're about to get, we'll get to your actual student aid index. So for student income, much simpler. You take the actual student income for 2023, since we're talking about the 2025-2026 FAFSA. That income number is again going to be pulled from the tax return. And then the adjustments to student income are structurally similar to what we talked about for parents, but a little bit simpler. So again, you subtract out the federal income taxes paid and FICA and Social Security. And then for dependent students, the income protection allowance for students is exactly $11,510 for this year. And so if you started with the student having income of $15,000, then their available income is going to be just $843. And then there's one adjustment that gets made to student income, and that's just that you cut that number in half. So we started with 15,000, and now $422 is what's going to be added to the student aid index number based on the student's income. Now, the implication from this is that student income up to the first roughly $15,000 does not meaningfully contribute to student aid index, but if income scales beyond that, then it does. Roughly 50 cents of each dollar above that will start hitting the student aid index number. Debbie, would you mind letting me know if there's any questions I should be answering as we go through here?
Sure.
All right, while we do that, go ahead.
There's just one question. I was just about to type it, but people are somebody's asking just to confirm the student income is if the student is working, and if they're not working, then student income is zero.
Yeah, exactly. And for a large share of people, student income is zero.
Right.
Student assets are, student contribution from assets is really simple. Just have one slide here. It's the net worth of those assets on the day that you submit FAFSA times 20%. There's no further adjustment that happens. And so the implication here is that assets that are owned by the parent are treated much more leniently than assets that are owned by the student. For example, if a student is saving money to buy a car or something else similar to that before they're going to college, let's say a laptop or anything, it probably makes sense to make that purchase before you submit FAFSA. Otherwise, 20% of that cash that you were saving to purchase that asset is going to be going towards your student aid index. Student trusts are considered an asset. Yes, there's a little bit more rules behind that, but yes. Darren, what do you ask? So Darren asked, how are student assets in a custodial savings account treated? Parent asset or student asset? If we're talking about a 529 plan, for example, that has the student as the beneficiary, but the parent is the owner of the plan, then it counts as a parent asset if the student is dependent. If the student is independent, which let's say generally means they're 24 or older, it would count as a student asset. If a grandparent has the 529 plan and is paying for helping the student pay for school, then that has zero impact on SAI altogether. A Roth IRA would count as a retirement asset. And so again, I have much more specific rules and details that can be shared around what counts and what doesn't count necessarily as a student asset or a parent asset, and can put something together, maybe more like a cheat sheet to share. Just for the sake of time, I might go through a little bit more of how we're wrapping this up, and then we'll return to as many as we can during Q&A, and I'll make sure to follow up on anything that we didn't answer over email as well. So over the last couple of slides, what we've done is calculated what the total student aid index looks like for a family of four with the income of 80K. Student has income of 15K. student has $2,000 of assets, parents have $50,000 of assets. That got us to three numbers. When we add them together, that leads to an SAI for the family of $5,672. This by itself doesn't tell you very much. We'll go through a little bit in a few minutes on how you can interpret this. But some of the key things to remember are you'll see this number, really the final version of it for the first time 1 to 3 days after you've submitted FAFSA. The income information that goes into all of the math that we walk through is going to be pulled automatically from your 2023 taxes. The asset information is going to be based on what those accounts have in them and what they're worth on the day that you submit FAFSA. And for this year, you won't really be submitting FAFSA until December 1st at the earliest. Lower SAI is going to mean more financial aid. Now, this is an important and slightly complicated thing to go through, so bear with me for a moment and happy to answer any questions about it. The key takeaway is that for a lot of people, parent assets are only going to be contributing 5.64% of their value towards student aid index. We showed you a bunch of different adjustments before. Let me just walk you through how we get there. So I'm going to use the example, the simplest way that I could come up with this is once you hit an AGI of $117,000 or higher, then you have this parent available income from a few slides ago of about $43,000, assuming you have no assets. And the reason why that's important is there is that parent contribution adjustment that we talked about for a little bit. And I told you to think about that like tax bracket. Once your AGI for a family of 4 hits 117K, then you're already at the highest level of that marginal tax bracket. So any assets that you add on top of that are going to be taxed towards SAI at 47% times the asset conversion rate. And so if we go to the right-hand side, just to use a simpler example, people often talk about how your assets as a parent are contribute up to 5.64% towards your SAI. How they get there is by saying, assuming you've hit the top of that marginal tax rate, you take your asset value times 12%, which is the rule that we went through a few slides ago, and then again times 47%. And 12% times 47% is 5.64%. So just know you're going to hear that 5.64% number from a bunch of different places. This is how we get there. Here's a sensitivity table, and I have versions of this in the appendix of this deck for family size of 3 and a family size of 5. What I want to drive home with this is, remember, number one, your student aid index is meant to say, we take your cost of attendance for a school, we subtract your student aid index, and the difference between those two is your level of financial need. And in yellow here, what you see is based on your parent income and based on your overall assets, excluding your retirement accounts and excluding the value of your primary home, who might still have financial need left over for a school that has a cost of attendance of $40,000. In the green bucket, you see who might still have financial need for the most expensive schools, which have a cost of attendance up to $90,000. And the red is indicative of the income and asset brackets where you are very unlikely to demonstrate any financial need for any school that's out there. And so generally, for even the most expensive schools, you're going to no longer demonstrate need once you hit the $300,000 level of income, more or less. And for schools that are in the $40,000 a year range, which I understand is still very expensive, you're less likely to demonstrate financial need once you're at roughly the $150,000 income level. Debbie, thank you very much for answering a lot of questions here.
Yeah, that's okay.
Really appreciate it.
Yeah, I'm trying to keep up. There's been a question a few times about mortgage payments and how that factors in anywhere, if it does. And sorry, kind of along the same lines, has been a lot of questions, which I answered, but we may as well talk about it, about cost of living. You know, is there any sort of adjustment because there's different costs of livings in different locations?
So both really good questions. So first, unfortunately, mortgage payments are normally not counted towards any of this math. But if you have, let's say, financial obligations that make it difficult for your family to pay for college, there is an appeal process. And in a few months, we're going to go through a detailed deck on what that appeal process looks like. Mortgage payments are not as likely to be, let's say, considered in the adjustments that a financial aid officer can make to your student aid index. But if there's been a change in your family's income, more job loss since the 2023 tax information that's pulled into your FAFSA, or if there are other obligations that your family has that aren't well represented by the data that's input into FAFSA, such as a really high cost of medical care for someone in the family with a chronic illness, or even in some cases, if there are multiple children in the family going to college at the same time, the financial aid office can take those incremental costs into consideration when they're finalizing your student aid index and cost of attendance and determining how much financial need you're eligible for. We'll go through a lot of that, quite a bit of detail in a few months or earlier if anybody would like to as well. So we'll go through this, just a few quick points, and I'm happy to expand on these a lot more at the end. Some of the key things to remember about minimizing your student aid index is one, asset purchase timing. So, and this is especially important for students. If there's a large purchase that you're planning to make anyway in the short term, and you have cash sitting, that's how you're going to make that purchase, you probably want to make it before you submit your FAFSA application so that it's not going to negatively impact your SAI. So the quick example that people will often use is if students planning to buy a car, students should buy the car before they file FAFSA. If they file it and then buy the car a month later, that's not going to really help them. A mistake people often make is not necessarily reporting net assets when they're valuing investment properties or a business. And so make sure that if you have significant assets that you're putting into the net worth calculation in your FAFSA application, that you subtract out any debt that's owed on those. If you have questions about how to value your business or a farm, please reach out to me. There's another set of calculations that goes into that reduces the value that you, I have a slide in the appendix that you can go through as well that shows how you adjust down the value of a business even after you subtract any debt from it, so that less of it actually is contributed towards SAI. I saw this question a handful of times as I was scrolling through, but grandparent 529 plans and really 529 plans that aren't owned by the student or by the parent don't count towards the student aid index at all. And so in a lot of cases, it makes sense to, it might be too late to plan for this at the moment, but just have that consideration that those numbers are not going to impact anything and they don't need to be reported anywhere.
Actually, Chris, in theory, as long as your 529 plan allows it, and each plan, varies, you can switch the ownership. So, it's something, but as Chris has mentioned, that you have to kind of weigh whether or not how much these changes will really impact your SAI. And, I think for people who are on the edge, and what I mean by the edge is kind of maybe their income is kind of on, might be on the edge of maybe causing them to get aid or not, then moving around your assets could make an impact. But if your income is much higher and, then moving your assets isn't gonna affect your SAI, because as, Chris has gone through, the income is the major driver.
Right, and thank you for that. And there's one other consideration. So if you wanted to move assets to a grandparent's name for a 529 account so that they don't impact SAI, in certain, depending on the size of that 529 plan, it could trigger a taxable event. And so, as Evie was saying, if that's something you consider doing, make sure to really consult someone who's an expert on your state-specific 529 plans and transfer rules. In some cases, it's possible. I unfortunately don't have as deep of knowledge on exactly where it is and where it's not. So the fourth, yeah, go ahead.
Do somebody's asking, what if I have low income because they're in retirement, but have high assets? What is the income level at which you don't have to report your assets? Is it 50,000 or 60,000?
It's roughly $60,000 for this year. So there's something called a simplified needs test, where if your income is at $60,000 and you don't have to file certain, if you have a simple tax return and it's around $60,000, then you don't have to report any assets. But if you're retired and you have income that's coming from different sources, such that you have to file different tax schedules with the IRS, then that doesn't apply. So it's a little bit complicated. I'm happy to send you the exact text, and you can just kind of see if you file any of the particular schedules with the IRS while you're retired, and even if your income is below 60K, then you'll still be required to show assets. Otherwise, you don't have to. The last two things on this slide to just hit really quickly. Make sure your family size is up to date. It's going to be pulled automatically from your 2023 tax return. And there's a step in the FAFSA before you submit it that allows you to update the family size if the family has grown since that tax filing date. And the reason that's important is, remember, the income protection allowance that we walked through for parents increases as the family size is larger. And so just make sure that you're getting full credit for the largest income protection allowance you can by accurately reflecting what the family size is. And we went through this a little bit earlier, and we'll go through this again in a few months. But if there's been a change in income since your 2023 taxes were filed, a downward revision, let's say, or a job loss, that is one of the best reasons why you should contact your financial aid office after you get your award package and attempt to appeal student aid index that they're using. There's a great process to do it that every school does now, and you should be able to have them reassess the inputs that go into your student aid index. I'll pause there for a minute, and then I know we're coming up a little bit on time, so I'm going to go through this section a little bit more quickly so we can save time for more questions.
Maybe one thing I just want to comment on, and I've been adding it, in my comments, is that what Chris is going over tonight only relates to the FAFSA. So if a college is asking you to fill out the CSS profile form, there are differences in the methodology and the calculations between what we're going over tonight and what a college might do with the CSS profile form. So this, but a college that asks for the CSS profile is also going to ask you to fill out FAFSA. And the reason for that is they might use the CSS profile to calculate how they're going to give out their own institutional money, but they still use the FAFSA because the FAFSA determines if you get federal aid, and it also, and maybe state aid, and it also determines or allows your student to take out federal student loans and Parent Plus loans. So that's the reason why you're still, most people are always still going to have to fill out the FAFSA, even if they're filling out the CSS profile. And somebody asks a question along the way here. Do I have to, is my SAI going to be calculated every year? And as you can see, based on, you know, what Chris has gone through, it is, because all the factors that we're talking about change every year. So that's another reason why families are asked to fill out the FAFSA every year.
Right. And just one really small implication of that is knowing that you have to fill this out every year, it can make sense for student assets to get depleted first if they're going to be used to pay for school, so that in the following year, they don't contribute towards student aid index. And that math and that logic is going to change depending on how much total parent income and assets are. But at least think about that if it's going to be part of your strategy. And I'm happy to help anybody think through that one-on-one as well. So we're going to go through this hopefully in less than 10 minutes, and then I'll take questions at the end. We're going to use the same example that we had before of the family of 4 with an 80K income and 50K assets, student 15K income, 2K of assets. And we're going to walk through what a sample financial aid package from your college might look like based on those factors and based on the rules that they have for how they're supposed to package your aid when they get that number. So we've already walked through this piece. Your financial need is determined by taking the cost of attendance at the college and then subtracting that student aid index number. I'm assuming for this case, in this example, that the college has a cost of attendance of $20,000. That cost of attendance is tuition plus fees plus room and board plus living expenses, and it's published by each school, and it sometimes changes each year. The first thing that you, basically the first thing that piece of federal aid that the financial aid office is supposed to evaluate you for and that your student aid index contributes to is a Pell Grant. Now, this won't be relevant for everybody, but if you are lower income and your income is less than 175% of the federal poverty rate for your family size, then you automatically qualify for roughly $7,400 of Pell Grants, which are free money, does not have to be paid back. If you don't qualify for a maximum Pell Grant, you can qualify for, I'm going to skip minimum Pell Grant for a second. You can qualify based on your student aid index. And so the way that would work is you would take the maximum Pell Grant amount, which is $73.95, and you subtract your student aid index. And that would be the size of the Pell Grant that you would be eligible for. And so when you get down to lower student aid index numbers, that's when you have more of an impact on whether you're going to get a Pell Grant or not. If your SAI is above 6650, you won't get a Pell Grant for this year. And the reason why is there's a minimum Pell Grant amount. It's $740. If this math gets you to a Pell Grant that's lower than 740, then unfortunately you just get a 0. But just know, this is the first thing that a college will look at. This is where a lot of people tend to focus. It's actually the largest slug of aid that doesn't have to be paid back that you can get if you are lower income. There's another set of grants that a family can get that's called FSEOG. Most schools participate in this, but not all. The typical award amount is somewhere between $100 and $4,000 per year, and this gets allocated by the financial aid office to students who have the lowest SAI first. So not everybody automatically gets this. Each school can decide between two methodologies for how they distribute the aid, but just know that it generally goes to whoever has the lowest SAI. The school determines how much that person gets in a range between 100 and 4,000, and funds do run out. So this is a little bit more of a first come, first served type of basis. If you apply earlier for FAFSA and apply to the school earlier, you're more likely to get it if you demonstrate the need. I'm just using, by the way, as an example that you'd get $1,000 just for the sake of this example financial aid package from FSEOG. And I'm assuming, as an example again, that you'd get $1,000 from the Federal Work Study Program, which is something that the vast majority of schools also participate in. Each school has a different size budget for how much federal work study they can provide to all of their students. And so in your financial aid package, you might end up seeing a line for federal work study. That's something that you can accept or reject. If you accept it, you have the option to engage in federal work study, which means typically a campus job or something similar that has a set wage and a set number of hours that you're able to work up to. And so if you accept it, you can use it, or you can choose not to. It's better to just accept it. And then after all of those things, in this example, you still have demonstrated financial need. And the one thing I want to zero in on here is if you still have financial need greater than zero, then you can be eligible for subsidized direct loans for the student from the government. And really what that means is a relatively low interest loan from the federal government, up to $3,500 for freshman year. And the government effectively pays off the interest while the student is in school until 6 months after they graduate. And so it's interest-free effectively while the student is in school, and it only starts accruing interest until after they graduate. They can only get up to $3,500 in this bucket. You can get another $2,000 for freshman year on top of that from an unsubsidized loan, which does accrue interest from the time that you borrow the money until the loan is paid off. Now, all of the things that I just went through in December and again next year, we're going to go through in a lot more detail. But I just wanted you to understand this is how the financial aid office is going to use your student aid index. They're going to try to see, based on what your financial need is, you qualify for the things that I just walked through. And after all of those things that you qualify for or not, is there remaining need left? And if there is remaining need, that's when they're going to consider helping you with institutional funds if they have them. And so the school might give you a grant or a discount to go to school. There might be state funds that are available that they'll try to allocate towards you. Or they might tell you that this remaining need needs to be filled by using student loans. All right, I'm gonna flip to one last thing. So I know I just went through a lot, and thank you very much for bearing with me. We spent a lot of the last 9 months taking all of that knowledge, as well as information about grants and some of the state-based financial aid programs, and putting them into an AI chatbot called College Aid. And so we literally just launched this platform today, and I'd love anybody who's listening to try it out and see if there's anything that it can help you with. There are two things that are available on this platform. So there's the College Aid bot, which I'll go through in a second. And then there's a pretty comprehensive scholarship database with about 1,000 scholarships on there right now, and we're constantly adding more. It's all completely free. There's no advertising happening through it. And I really hope that it just provides a lot of value to a lot of people. Here's a just really quick example of some of the things that this bot does. It answers questions in English or Spanish, and we're adding a few other languages right now. It has a really robust set of sources that are primarily from the federal government, but we're turning a lot of what is difficult to read and understand into as easy of a format as is possible. And if there are questions that you're asking that where you don't feel comfortable with the answer, you can use the book now button there to book time for free right now with somebody on our team who can help you go through things in a little bit more detail. And so if you are interested in using this now or in the future, you just go to collegeaid.org. You can make an account in about 1 minute and then start asking the bot any questions you might have. On the right-hand side, you'll see just a really quick roadmap on what this bot is really good at today and what it's going to get very good at over the course of the next 2 months. We're going to continually add information in there and expand its knowledge around state-based financial aid applications and how they might differ from FAFSA. We're going to add more federal student loan programs, what the qualification terms look like, eligibility requirements, and repayment programs look like. And we're going to add support for more languages. And if there's anything that you wish was there or want to see in there that isn't currently, please email us, and we're more than happy to put it on our roadmap and figure out if we can build it. So with that, happy to turn it over to more general Q&A, and thank you again for spending so much time with us tonight.
Great. Okay. Just a lot of, not a lot, but there are some questions about property that is not your primary residence, and how is that valued and where is that included in the calculation?
Great question. So an investment property is going to contribute you want to take the net value of that investment property. So it would be the value of it today minus the debt that you owe on it. And then that's going to go into the net worth calculation for the parent. So you'll take that. Let's use a quick example. Let's say a property is worth $200,000 and there's $100,000 of debt on it. So there's $100,000 of equity. We add that to your asset line. And then we reduce that by, let's just use the 5.64% number for simplicity. So $5,640 of the value of that property is going to go towards SAI.
I know you mentioned it, but I think it's worth repeating just because of the number of questions about it. About if there are any changes that somebody might have in their financial situation or their household, makeup between the 2023 taxes, which are going to be used for this current FAFSA, what can they do? And I think that, and what's the timing of when they can tell colleges about these differences?
It's a great question and a really important topic. So already if there's been a major change in your family's income or increased costs that aren't well reflected in your FAFSA based on 2023 taxes, or that aren't captured at all because your lifestyle costs don't go into FAFSA. You can either let a school know now or wait until you've been admitted. I personally think, because not all schools are need blind, you might want to wait until after the admission to let them know. If your school already sends a financial aid package at the same time that you're admitted, then you should be able to initiate an appeal of your financial aid package at that point. If they're going to wait to send you that financial aid package until potentially a few weeks after you've been admitted, it's totally fine to reach out to the financial aid office and let them know that you want to let them know about factors in your financial profile that are not reflected in your FAFSA after you're admitted and before they send the aid package.
So unfortunately, it does sound like a lot of work, and depending on how many colleges your student is accepted to and that you want to appeal, it can be a little time consuming. But from the college's standpoint, in all honesty, they don't want to hear about these changes or go through the evaluation of the changes until they even know that they've accepted your student. So, you know, that's why they wait until later in the process after your student's been accepted and after they send you that initial package.
Yeah.
Maybe you could talk a little bit, Chris. Somebody's asking, does anybody help us go through the FAFSA? Just about the pure mechanics of like when the FAFSA is going to be open on December. Like how do people actually fill it out? I mean, not in, you don't have to go in like major detail, but
Sure.
just, you know, in general, why it's different now than it was like 2 years ago.
Sure. So in order to fill out FAFSA, the first step you're going to want to think about is creating an FSA ID for each person who's required to contribute to your FAFSA. And the reason I'm mentioning that is sometimes it takes up to 3 days in order to create one and have it verified for you to be able to physically log in and fill out the online application. In the very beginning of December, we're going to go through a presentation like this that will go through step by step what that FAFSA application looks like and what you should know. But I think a little bit to your point, Debbie, the FAFSA form itself was revised starting this past year. And while there were a lot of issues with it, some of the benefits moving forward are that a lot of the information that you have to put into FAFSA is meaningfully simpler than it used to be. So really the key thing becomes you create your FSA ID, you start your application, you answer a handful of questions, not even that many anymore, and you authorize the IRS to transfer all of the income data into your application. And they can do that for each person who's required to contribute towards the FAFSA application. And your data is private. Other people are not going to see your data in this process. So the key part of it ends up that you have to do a little bit more manually is valuing your assets and making sure that you're reporting the right the net amount of the right categories of assets. And then you don't need to do any of the math that we walk through today. All that math is going to get done for you by the FAFSA processing system. But it is really important to understand how they go through that math so that if you kind of expect that your SAI should have been a different number, you can dig into whether there were any errors in the process. And it's important because there were a lot of errors last year. So maybe to bring that to a close, early December, we'll walk through this step by step. We'll tell you what's going to be done for you and what you need to do, and the key things to know about the pieces that you need to do. And that bot that I presented to you before is already set up to answer pretty much any question about the 2025-2026 FAFSA.
And so the reason I wanted to bring it up is not that, you know, we can't help you. I mean, we definitely can, but you don't really, honestly, these days, you shouldn't be hiring somebody or, you know, that help you fill out the FAFSA, because so much now is kind of a little bit out of your control, because as Chris just described, it's, you know, you're giving permission for the government to transfer the information from the IRS system, you know, to the FAFSA, which was the more complicated part that people had to fill out on their own in the past. And what, you know, you're going to be doing is, you know, filling out the asset side. But it is good to kind of have a general idea of where your SAI you think should end up, because even though this behind the scenes is happening with the IRS, there have been some issues, and the one issue that comes to mind, and I don't honestly know if it got fixed, but for a long time there were issues with 401k rollovers were being included as an income, and would basically balloon people's SAIs.
Yeah.
So that's just kind of an explanation. Honestly, if somebody says, we have a service to help you with your FAFSA, I would be a little leery.
I think that's honestly a very good piece of advice at the moment. This last year, there was a lot of chaos. This year, things are supposed to be a little bit more straightforward. And if things go smoothly, then this should be the simplest FAFSA that people have filled out yet. I'm holding my breath to hope that that's true. But yeah, you're exactly right.
You know what, Chris, can you pull up the chart that you did with the income and assets? Because there were like some questions about that. And particularly because I kind of said, well, if you're on the edge, and so somebody said, like, how do I know I'm on the edge? But just so that, people, because somebody asked, I don't know if they had an income of, so actually, so is the last one 400,000? I'm sorry, I have something on my screen that's blocking it.
Yeah. Yeah.
So as somebody asked if they had an income of 400,000 and 0 assets, you can see that you're going to end up with an SAI of 103,000, which, at this point is probably higher than any college is a cost of attendance, at least this year. So all the conversation that we had about like moving assets to reduce your SAI, well, actually, in this case, you would have 0 assets. I mean, there's nothing that you can do, to get aid, because your income is driving everything related to the SAI. So, I guess I would be looking at if you had assets income between 200 to 300,000, depending on what your assets are, you might be able to, take advantage of some legal things to maybe reduce your SAI. But again, movement of investments, although it will reduce the SAI, is not going to reduce it as much as a reduction in income.
Now, just to add on to that for a little bit, I just want to remind people that these are the assumptions based on a family of 4 people. If you have $400,000 of income and a much larger family, it's possible that maybe you would still qualify for aid at the most expensive schools. And as part of that FAFSA appeal process that you can do, let's say you have higher income, but you have somebody you're supporting in the households who has chronic illness and really high medical expenses. There are a host of reasons why, even if you have really high income, you might be able to get the financial aid office to consider reducing the amount of it that they consider is available towards paying for college and still qualify for some amount of aid. But barring those situations, Debbie, you're exactly right.
And the other thing I just want to comment, and I know majority of families on here are families with high school seniors, but everything we went through tonight is really, if you want to make any impact to your SAI, the best time to do it is when your student is in 10th grade, depending on parts of 11th grade, because as you can see, the tax year that's being used is 2 years before they start college. And it just becomes a timing issue. People don't become interested or aware of all this financial aid talk and calculations until senior year, and then there's not much they can do, because the real year that you should become aware of this is in 10th and 11th grade, and it's just hard, honestly, to get people's attention to want to understand it then.
And even then, moves that you might make to try to reduce your SAI might end up not mattering at all, because the TSS profile won't take them into consideration.
And that's a really good point, right? So everything we talked about tonight is related to the FAFSA, and it's related to schools that do not take the CSS profile, which there are many schools that do not take the CSS profile. But if your student is applying to one of those schools, then the school's going to use the questions and information on the CSS profile to make a determination of aid. And you'll still have to fill out the FAFSA, but the FAFSA is going to be used for the federal and state aid and access to loans, not a determination of how much money the college is going to give.
Right.
So I say this one last thing is that if you see ads, which I see them, for people who saying, we will reduce, if you make over 150,000, we will reduce your SAI. It's kind of like one of those, I don't know, like late night, TV ads that you used to have. I mean, it's just really hard, and it's just kind of probably not true. So don't want to knock any company out there that might say that, but it's just, it's just a tagline that they're trying to get your attention, but they really can't deliver on.
Now, I saw a couple of questions that touch on a topic that I'm personally really interested in. And so I saw a few times people asking questions about how do you value your investment properties and how do you value your business before applying the adjustments to them. And there's a lot of gray area in how exactly that gets done. So a little side project I'm working on is trying to get some more confirmation around what is a valid versus invalid way to do it and what ranges of value should be applied. It's not like the financial aid office has an instruction manual on whether you did it correctly or not. And there's very little that's actually published about it. And so I will work on trying to get as detailed of an answer as I can on some of the specifics around what would be accepted versus not, and get it to anybody who might be interested. That valuing those things is something that I have quite a bit of expertise in. Getting the confirmation on what the financial aid office will accept is something that they're not really sure about yet.
What about, Chris, somebody's asking about timeshares. How do you value that?
There should be equity value within the timeshare. But that's honestly a fantastic example where you have an ongoing obligation on that asset when it comes to the maintenance fees. And depending on how you decided to value it, a timeshare could be worth 0 or it could be worth a lot. But there's no hard set of rules around exactly how to do that. And I'll figure out how to put one together.
So somebody's asking, many schools have deadlines for the FAFSA and CSS submission. How can we wait for the acceptance letter if it is not expected until after the financial aid forms are due? That's a good question. And honestly, if you want to be considered for any aid, whether it's filling out the FAFSA or the CSS profile, then you have to submit it by the school's deadline. And actually, most schools' deadlines for these financial aid forms are before they tell you about acceptances. But the other point about that question is I would be very aware of deadlines, because the deadlines for each school is going to be different than what the federal deadline is. Quite honestly, the FAFSA is open for over a year, for families to fill out for lots of different reasons, but schools have different deadlines for their processes that you need to adhere to.
And states do as well.
Yes.
So some states actually have quite generous financial aid programs that stack on top of federal student aid. And some of them just do candidly start much earlier than the FAFSA deadline. And so we have a list of them that's on that college aid bot and platform. So if you ask it, it'll send you to the right place. But if it's helpful, I think we'd be more than happy to pull together a more comprehensive set of financial aid deadlines for, say, like the top 1,000 schools or so.
Yeah. And the other thing, there were some questions, do I really have to fill out FAFSA? I'm not gonna, I'm looking at these charts. I understand the calculation. I'm not gonna get any aid. And you don't. Nobody's forcing you. You do not have to fill out the FAFSA. That's a decision that you can make. Another option is, if you feel like you're not going to get any aid, but you might still want your student to take out federal loans. And this goes to the point of like the federal deadline, for FAFSA. You can fill out the FAFSA at any point within the federal, deadline. So if for whatever reason you don't want the school to see any financial information, which they will, see if you fill out the FAFSA, you can fill out the FAFSA after your student gets accepted, and then they still get access to loans. So, that's just another way of using the forms. If you, truly don't feel you're going to get aid, and you don't want to be considered for aid, but you still want access to the loans.
Now, I would just add to that some schools require you to submit a FAFSA, even if you are just to get merit aid. And so merit aid would be everything that's not need-based aid. They really want your student because they excel academically or in sports or some other category. And a lot of programs just have as a requirement that they have FAFSA on file for you before they distribute merit aid.
Good point. Yeah. So I would, if your student is trying to get merit aid, I would definitely check with the school if you need to fill out FAFSA. It varies. And the reason why a school might still want you to fill out FAFSA, even though your student is, is applying or hoping to get merit, which isn't based on need, is that they sometimes want to make sure that you don't have financial need, because they might want to help you with, federal and need-based aid in addition to merit scholarships. So that's why they might ask for the FAFSA to be filled out, even though they know that you're not going to get, or they don't know yet, but they want to make sure that you're not going to get any other aid. Okay, let's see what other questions.
I saw a question about twins and multiple children a handful of times, and really the key facts. Before 2024, 2025, if you had multiple children in school, then the number that came out of FAFSA was reduced. SAI used to be called something else, and that number was impacted by the number of children you had in college at the same time. Starting in 2024, 2025, and moving on, number of children does not have any impact on your SAI. However, schools are allowed to take it into consideration if you submit an appeal and demonstrate that the cost of sending 2 children to schools is very high. And so it's actually one of the valid reasons why you're allowed to submit an appeal. And I'd encourage you to do so if you're in that position.
So somebody asked a really good question, and we get this question a lot. On the Common App, there's a question about, will you be applying for financial aid? And it's really not a trick question. If you are going to fill out the FAFSA and the CSS profile, then I would, say on the Common App, yes, you're applying for financial aid. From what I've heard from colleges, the reason why they ask is to actually make sure that they pull and match up the financial aid form to the Common App. So it's not used in any other mysterious way. So just be truthful and and say you're applying for aid or not. And if you're applying for aid, they're going to look for those forms.
But even if you didn't, let's say, fill that out and you submitted FAFSA later, the school will typically get your FAFSA package from the Department of Education 1 to 3 days after you submit FAFSA, whenever you submit it. So don't, let's say, be worried if you answered it one way and you decided to apply for aid later. They'll still get information.
And yeah, so along this conversation, somebody asked, can the students submit the FAFSA many months after the college application? They absolutely can. In that case, if they're filling out FAFSA, they won't be considered for aid from the college, because the college will have gone through their process. But in that case, they could, that would be the reason why they would fill it out and still get access to loans. Oh, good question. How do you prove your assets? That you're sharing with the sharing on the FAFSA.
So you might get selected for something called verification by the financial aid office. And so it's kind of like an audit. And at that point, they would go through to match up and make sure that what you're providing or claiming are your assets are actually captured in or are accurately captured. So a small percentage of people do get selected for verification at each school each year. And the likelihood, and there's a few other things that happen in the background that flag FAFSA applications that are more likely to receive an audit. That's about it.
Yeah, so I can't remember if we mentioned this, but the assets that when you fill out the FAFSA are the value of the day that you fill out FAFSA. So it's a good idea, to just take a snapshot, like take a picture of, if you're pulling them off of your account that's online, just record, like have something that says, this is where I got this value from on this date, just for your own records and in case, you're asked at some point. I know we mentioned this, but there's been a few questions about, can we start the FAFSA now?
You cannot start the 2025-2026 FAFSA until the beginning of December. But if you are still trying to fill out a FAFSA for the current academic year, you can still fill it out.
But you can create an FSA ID now.
Correct.
Honestly, I would do it. So
yeah, there's really no downside.
Right. You need one, and your student needs one.
There's a chart that explains which parent needs one and if both parents need them. So you might need 2 or you might need 3, but good to figure that out earlier.
So somebody's asking, my household's on a single income. What does an SAI of 5,800 mean? Maybe, you can just give a general sense.
So an SAI of 5,800 in this scenario would generally mean that you'd be eligible for a Pell Grant of about $1,600. You would be unlikely to get that second set of grant money called FSDOG, because that is most likely to go to people that have an SAI between 0 and negative 1,500. But you probably would get some level of work study that's offered, as well as the student would probably get subsidized student loans up to $3,500 for their freshman year. And so you can kind of think of it as, if I had to guess, just based on knowing those facts and assuming that the school's cost of attendance is in the average range, that you'd get $1,600 plus about $1,000 of work study plus $5,500 in loans in the name of the student, and the rest would be offered to you as a Parent Plus loan or as institutional aid when you get your financial aid package.
There's a good question. Somebody's saying, I've noticed that the net price calculators on college website generate significantly different SAI estimates. How do you assess this compared to, how do you assess this to compare net price calculators of one school to another?
This is a great question. A lot of calculators online and some that colleges use can be outdated. And so the assumptions that went into those numbers that I was showing you are based on the most recent guideline that the Department of Education published in August that impact the 2025-2026 award year. A lot of these numbers get slightly tweaked and updated. And a lot of the calculators that you might be looking at, for some schools or some websites, they might be using the old structure of FAFSA. Some of them might be using last year's income protection allowances, and some of them might be new. So it is hard to compare, and in many cases, it's impossible for you to know which one they're using. Net price calculators, the last word I'll say on that, they are difficult to learn very much from, in my experience. Debbie, I'm curious what your experience has been, given that you have a lot of insight into the net price that quite a large number of people have been paying.
Yeah. So at schools that are very generous for need-based aid, and those honestly tend to be the selective colleges because they have a lot of money from their endowments. They're giving out a lot of money to families with need. Those schools tend to be pretty accurate. So, I'm just going to throw it out, like maybe it's the top 20 schools. If you go to a net price calculator on those websites, they're pretty accurate. Schools that are asking about your students' GPA test scores, so they're trying to include some sort of merit calculation that they probably are giving out merit based on a chart of of GPA and test scores. I mean, those also tend to be somewhat accurate. Everybody else, I can't really say much about the accuracy. I would still do the net price calculator, and just, kind of store the result. I always say that it's directional. I have seen, the net price calculator be in the range of, you know, somewhere between what the number is that it generates and, up to $10,000 more. Not that that's like a good number, but it's not, you're not going to do a net price calculator and it's going to end up being $30,000 more. So, maybe it gives you a ballpark, a large ballpark. But it's some schools it's worthwhile and some schools it isn't. And I wish I had better information and directions to tell you about which schools to go to. But the selective schools tend to be very accurate. Schools that give out a lot of merit, like University of Alabama, tend to be accurate. And then there's a host that we kind of just don't know.
I wish we knew, but thank you for that.
Our high school district requires FAFSA completion as part of the graduation requirement. This is becoming more of a trend. Some states require it for the whole state. Districts are requiring it. Not quite sure what my personal opinion about that is.
Sorry if I just missed something. I was answering a question.
No, that's okay. I think honestly, for some states and districts, they are requiring FAFSA because they have just generally found that the more the number of students who fill out FAFSA, the more likely that students will end up going to college. So that they are making this kind of like connection between filling out the FAFSA and a student going to college, which is a good thing. So they, want to encourage, college enrollment. So that's why they, are pushing so much on the FAFSA completion. But in, school districts with high college enrollment, you might feel like it's a little invasive.
Yeah. I mean, so one thing to add to that is a lot of people who are eligible for significant amounts of federal student aid don't end up filling out the FAFSA and just completely miss out on it. And I saw a pretty good estimate 2 years ago of something like a $6 billion worth of Pell Grants and other grant type funds from states that people could have been eligible for if they had filled it out, that they just completely missed out on. And so I think there's an effort to just make sure that those who really need it don't fall through the cracks.
Let's see what else. I know there's been a lot of questions about divorce and, honestly, just because of the time and stuff, and we've done this in the past, I would probably say we'll do a separate session on divorce because it's just a lot of, little things that are fair questions that people, want to get answers to. So if you guys can wait a little bit, we'll try and figure out a time in the next few weeks to do something about divorce.
Yeah, I know it's a little bit confusing because just like how do you value assets? There's a little bit of gray area around how the FAFSA says the parent who provides more financial support over the last calendar year should be the one to fill things out. There's a lot of wiggle room in defining, well, who's actually providing more support. So there's a few things called letter to colleague that the Department of Education publishes for the financial aid administrators so that they can better understand how to answer these questions. I've read them all, and a lot of them still come down to the parents effectively decide who is the right one to fill it out, as long as it's within reason.
I mean, I think we've answered a lot. Hopefully that this was helpful. I mean, Chris, it's like you could become a professor on college finances. I guess the only thing I would say is if you have friends with younger students in 10th and 11th grade, tell them this is the stuff that they should really be learning. You know, I wish I could kind of like shake parents back then and say, listen to us. I know, there's a lot of people like, it's not time yet. I don't need to, but you do, but it's hard again to break through. So hopefully this gives you a better idea of how the numbers are calculated, when you get your number, you'll have a sense of where it's coming from, how the government uses it, how the colleges use it, and when and where you might be able to make an impact, and when some of these ideas of moving money around is not going to make as much of an impact as you would hope. Anything you want to add, Chris?
Just if there's anything that you have remaining questions about, please do consider trying out the bot at collegeaid.org. And if you want to contact me, I'll send my contact email through in the when we send through a copy of this deck in the presentation, just so that you have it there and ready. And really, it's helpful for me to learn what questions people might have that haven't already been answered so that we can improve this for the next time we try to communicate it to people. So with that, thank you very much for sticking with us for 90 minutes through some pretty dense topics. I'm hopeful that you got a lot out of it, and excited to see you at the next one about filling out FAFSA.
And so Lindsay wrote a comment, which I actually might screenshot and share it in general, like for other people. She says, I have a senior and a freshman, and I wish I would have learned so much of this sooner. This is, and I feel like my freshman is going to be a better place. Yes, usually the second and third children get the benefit of what the parents learned the first time. But but if you as a friend, you should tell your other friends with younger students to, hop on the bandwagon and start learning this stuff now. Okay, thank you, everybody. Thank you, Chris, and we'll see everyone soon.
Thank you very much.
Okay.
Have a great night.
Bye.